Hello, traders. Gary Wagner with the Silver Forecast. 9:15 a.m. in Honolulu, Hawaii. It is Wednesday, the 9th day of March, and this is the Daily Report. We do have silver trading slightly higher this morning, trading up about 8 cents, currently at 36.09. We are looking at a 44-minute bar chart. Reason for me starting the program off with this is I do want to show you in terms of the range that we've had. Of course, this is the 7th, the 8th, and the 9th. And you can see that it has been trading really in a highly defined range with a low at about 35.50 and this 31-year record top that we have at around 36.70 right in here. As you can see, the market, although trading actively, has run into this channel right here in which, at least at this point, it has not been able to break out of. Now, one other way to look at the market is the fact as this range really narrows, you know that I am a big proponent for looking at pennant or flag formations found within the market, especially in the precious metals. And we can certainly say that as this range begins to narrow, as we see here, we are, of course, I believe, coming near the apex right in here. And of course, once you're at the apex of a flag formation, typically what you will see is the energy will be released when it hits the apex and it will break out in the direction of the prevalent trend. And in this case, that trend is, of course, up. This is a daily candlestick chart. This is the chart that we have been looking at over the last couple of days, in which we have created an Andrews pitchfork. Our low is really the beginning of the breakout, and then we use our second data point, this low and this high. My concern in this particular chart has absolutely been that as the market reached the top of that Andrews pitchfork, as you can see, it has been flirting with, but not breaking out and over that particular area. My sentiment is that if it cannot, in fact, break out over this trend line, we will probably see the market retrace back down and then move up. However, if we are able to see the market substantially break above this, and given the fact that when we looked at it on that intraday chart, we saw a pennant formation forming, we might, in fact, get a breakout to the upside in this area. As I say, over the last couple of days, there clearly has not been enough information. This market has been on such a runaway bull tear that there are going to be points of retracements and corrections. It's simply being able to pick out when those corrections come that have proved to be difficult. You know, as I've watched the market over the last couple of days, especially watching it during the evening sessions, the market goes from being unchanged to up 10 cents to down 10 cents, but it's truly been in this cycle in which it's been unable to break out. When we look at our Henkin charts, and I have two of them up, on the right-hand side, we have our weekly Henkin chart, and on the left-hand side, we have our daily Henkin chart. And first, let's draw our attention to this daily. As you can see, as the market moved up, the body size in these first couple of candles right here, here, and here really began to grow. You also had that absence of the lower wicks, which is very, very important. Very, very strong indications that the strength of the trend was continuing. That, of course, was followed by a consolidating day, another consolidating day. In other words, the body size of the candles begins to move down, but this is where that 31-year high was reached, and you can see that right here. Following that, the market, of course, has been absolutely recouping. But here is what I'm finding interesting, that even with the size of these bodies beginning to shrink, they are green, indicating the trend, the uptrend is still an uptrend, and you still do have this absence of these lower wicks here. To me, that cites an incredibly, incredibly bullish indication. When we go and look at our weekly Henkin chart, you can see that the moves that we have seen have almost been a straight linear 90-degree move up, especially this last sets of rallies. As you can see, the tact or the angle is almost straight up, unlike this last tact, which really did have an angle, wasn't a straight linear line. It certainly is that now. So the fact that we would have the market consolidate at this 31-year high, kind of form a base in this area before breaking to the upside, absolutely really doesn't surprise me either. So it's simply this: I have no fear buying the breakout and buying the dip, but I will feel more comfortable once we get some closes above the high that we reach, which is that 3620, that area in there. Once we get the market moving beyond that and sustaining a close in that area, I will feel comfortable believing that this uptrend is continuing. My sentiment for the market right now is as follows: I have absolutely a bullish tact. Will there be a correction in this area? Well, the market's been trying to, but at the same time, we see that it has been forming a base in this area. We'll have to wait and see. But as I said, I would feel comfortable once it breaks above that line in the Andrews pitchfork. I would have no problems buying the breakout. I also have no problems buying dips in these markets. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye bye.